The American dream now is freedom, monetary freedom, and secondly is time freedom. They're probably just going to try to buy their own home, but that's becoming inconvenient because these regulations are designed for people who have W-2 jobs. Entrepreneurs are almost punished when they're trying to get into real estate. If you want to start small, that's great. If you want to start big, that's great. But just start. Start. That's what's important.
All right, what is up? And welcome back to Zen Business Podcast. Today I have with me Mirza Baig, the founder and CEO of Casa Shares, which is basically like the Robinhood of real estate investing. A super cool platform. I'm really excited to have you on today. So Mirza, thank you for coming on the show.
Jonathan, thanks for having me.
I'm really pumped for today's conversation. I think you're touching on something that's just so important to so many people. We got this whole generation of Gen Zs who feel kind of left behind by the older generations. And then you got the millennials who've been working their asses off, but encountered pandemics and market crashes and all this other shit. And it just seems like it's very hard for the young people to get ahead right now. And so what I think you're doing is really incredible. So why don't you tell me a little bit about what Casa Shares does?
Sure. Yeah. Casa Shares, I mean, really, when you think about it is, looking back at generations past, specifically baby boomers, right? Their goal was get a house, stay in the house for 30 years, build your wealth through there. That's your nest egg, right? And like you said, when you get into the newer generations, it started kind of with the millennials and now with Generation Z as well. The Gen Zers are facing the same issues. It's becoming a lot harder to get into real estate. And even for those who are investing in crypto or investing in stocks, they're used to that. But there hasn't been really that much, that many easy options for them to get into real estate. And so, with me and my wife working in real estate investing and getting our own units, renovating them, fixing them up, we learned a lot from there. And we also realized how many people were priced out of that area. And so, started thinking on how could we make this accessible to everyone. And through a mutual connection, I was able to sync up with my co-founder, McKay Francis, and he happens to be a very successful real estate developer. And from there, we just came up with this plan to this is our mission. Let's make real estate investing available for all.
Awesome. So making sure I understand this right, Casa Shares makes real estate investing available to everybody for as low as $100 entry investment.
Absolutely.
Right.
Yeah. So what we do is we have an SEC qualification with the Securities and Exchange Commission, which allows us to essentially allow anybody who's a retail investor to get in on real estate assets. Traditionally, that would be reserved for, institutional investors. So basically millionaires who are already rich getting the opportunities, right? And thanks to the Jobs Act and some other laws that were put into place, allowing this to be possible, we capitalized on that and we developed this app around those laws. And the great part about it is it offers also a level of security for our investors because they know that we are audited, that we are compliant with the SEC. So when you're investing, that all those checks and balances are taking place.
Yeah, that's really critical. I'm glad you mentioned that because I think you could easily just make a wrapper product and be like, hey, invest your money in this. And then it's like an FTX thing where they're just like using the money for something else. But
no, absolutely. Yeah, we get audited on an annual basis. And so that's a huge selling point for what we're building.
Yeah, and I'm a big believer in trust and safety these days. I'm personally kind of like cagey about my own data. I mean, let alone my own financial data. But I think it's such an important thing to do right now because so people like myself who worked really hard for the first, I've been in the professional market for 20 years. I worked really hard for the first 15 years of my career. I worked in corporate. I got my master's. I started a company and, didn't do that well. And then I started another company and I actually did pretty well. And then I went to buy a home. And first of all, as an entrepreneur, I didn't qualify for much because I was not claiming much on my taxes, right? So when it came to qualifying to buy a home, first of all, it's like a huge CapEx investment in the realm of business and return on invested capital, but also they probed every aspect of my life and then they ended up selling my data and I got all of these calls from different loan officers. I guess Experian had sold my data and I just felt very awkward and weird after that. And I told them to delete my data. But anyway, I didn't get approved for as much as I wanted. My wife actually got a better approval than I did. And so just the whole process was just so convoluted and broken and intrusive. And I felt like the little guy. I felt like they were big leaguing me all the time. So all of that left me like not feeling good, but I wanted to be a real estate investor. I wanted exposure to real estate. And so I think you're speaking to like a whole generation with this product, because that's just one of the stories of me being offended by the real estate market. But there's other ones from, my wife wanting to buy a home to me wanting to have some of my capital in real estate. And so I don't know, what's your personal connection to this? What's your founder story here?
It's really interesting that you mentioned the loans being difficult to get for entrepreneurs. That's absolutely true, because there's certain regulations in place. These regulations are designed for people who have W-2 jobs. It's almost assumed that if you have a W-2 job, it's just going to be there. But that's not true in reality, right? People lose their jobs. People get laid off, which we've seen in recent times. And so it's very interesting to see how entrepreneurs are almost punished when they're trying to get into real estate investing. It's absolutely true. And so there's a few ways around it. And I could tell you the way I did it, which was the hard way. And then I could tell you the easy way, which is really what we built here at Casa Shares, and trying to making it available for everybody. So my story is really, I was living in an apartment and I was recently married, and my wife was saying, hey, here's a house. We should totally get this house. I was looking at it and saying, it doesn't look that good to me. It needs a lot of work. And she convinced me to get it. And so, as a real estate, I've been doing real estate for a while on the side, right? Because I knew that's how you get ahead. And so I used my real estate license to buy the house and then essentially pay myself back. So I was able to buy the house for only 2.5% down, because I got 5% down payment to get a conventional loan. Then I received 2.5% commission. So essentially paid myself back 2.5%.
Oh, brilliant. Double dipped it.
And so 2.5% in, got super leverage. That's 40x leverage into a home, right? Which is crazy.
Incredible.
And then, lived in it, renovated it while we were living in it. So we didn't have a kitchen for a while.
Oh my God.
And, you learn all these little things, like how hard it is to go through each step. Getting approved, very difficult, especially if you're a business owner, or if you're not making, well, nowadays with the house prices, you'd have to be making, maybe in some cities, multiple six figures even to get approved. And you'd need a sizable down payment. You're talking about six figures in some cities. And it's just outrageous. So, you look at it like that, and being able to get in, I realized something. I knew how to do loans because I had done loans before. I knew how to do real estate. So I was able to pay myself back. And I just barely got into like an 800 square foot apartment. Wow. And when you think about it, okay, so if I'm pulling all these strings with all these different things that I know that all my friends don't know, and most people don't have these experiences, then how is it for other people? That's the question I asked myself. And that's when I started thinking about, there's got to be a better way for people to be able to get into real estate. Because right now you can get into crypto, right? Before Casa Shares, you can get into crypto easily. You can get into stocks pretty easily with like a Robinhood or other E-Trade or these other businesses. But real estate has always been, it's a lot of risk to do what we did, because we put everything into one unit, and if things didn't go well, it was a big risk. And so to be able to diversify and to be able to leverage hundreds of other people to go into an asset and reduce that risk and spread it across hundreds of people, that's super cool, I think.
Yeah, I think spreading the risk is the interesting part to me, but there's so many pieces that I want to unpack from that. But I think when you're young, you don't understand how big of a deal risk is. Yeah. You might get into risky investments and all that, but then when you actually go through the process of buying a home and you actually have to, let's just say your savings is $80,000 and you put it down, and you're basically broke after that, and then you got a monthly payment. And so a lot of the logistics are very favored to rich people. And then, from being an accredited investor to having, high enough income where you can qualify for a big loan if you're not like an early entrepreneur. There's just so many reasons why like it's not very accessible to the everyday person. And so I really love that like you're making it like not only like flexible, like you could invest $100, $1,000 or $5,000 into one of these properties.
Absolutely.
And these basically micro investors can get the equity on the house. They can get dividends from the rent payments, as far as I understand it. Mm-hmm. So you're getting all the benefits with none of the pain in the ass, none of the red tape.
So that first condo, this is great that you brought that up. The the work that you have to do, the actual manual work you have to do, it's not only about financial, it's about your time as well, right? So if you look at like the first condo that we got, we moved out of it, we bought another condo, we turned the first one into a investment rental unit. So, each time a renter comes out, we renovate a little more, and then we've been bringing the price up. Especially with inflation, it's been, something we're able to increase the price.
It's great.
It's a lot of work though. And there's a lot of risk then again, right? Because now if it doesn't rent, you have to make that payment still. And if the toilet breaks, guess who's calling? They're going to call you right away, because of course nobody wants to live in a house where there's something broken.
Yeah.
So you're always on call essentially. And the thing about Casa Shares is, those things will still arise, but we handle them. We have property management teams for every property. And so when you're investing, you're basically able to sit down on your couch and push a few buttons and get the same exact experience, but not having to go through all the hassles.
For many years, going all the way back to the infomercial days, Robert Kiyosaki and the Dan Lok and these guys that were marketing real estate as a passive investment, and then it moved to the internet marketers and all the scammers talking about get passive investment, buy my course and all this shit. But the truth is like, and it's no knock on real estate ownership, but it is work. Right. My dad, that was his whole world. He owned a bunch of real estate, and he was, him and a construction crew were running it. Right. Like it's like fixing toilets and patching drywall and stuff like that. So it's not passive income. But if you invest with Casa Shares, it actually is passive income, because you're not repairing that toilet. They're not calling you when the heater goes out. And so it can actually truly be that. And that's why I feel like this is very revolutionary, because a lot of people, they want the upside, but they don't want to deal with, I don't personally want to deal with, this is another reason why I didn't buy any investment properties. I just said I'm going to invest in my business, because I don't want to be having somebody bug me when the washer dies or whatever else. I'm not going to run out to the property. I don't have time for that.
Yeah. And that's true. And a lot of it also has to do with generally, for example, I bought the first unit. It wasn't originally a rental unit for me. It was my primary home. That's where I was living. And then when I upgraded that home, I was able to keep, hold on to the previous one to turn it into a rental. So a lot of times people are, the focus they might have at the beginning, if they're really hellbent on getting into real estate, is they're probably just going to try to buy their own home. But that's becoming also kind of inconvenient, because a lot of times you might not know where your next job is going to be, and maybe you don't want to be tied down to a specific location. Yeah. The later generations, they're more concerned about the bottom line. What are they getting? So if they can invest in Casa Shares and they can get the benefits of investing in multiple locations without doing any of the work, right? But then they can just rent wherever they want to live. And you've probably heard Grant Cardone. He says, he says basically to buy what you're renting and to rent where you live. And there is some truth in that. Now, I could see the benefit in some cases like mine, where I was able to get ridiculous leverage and that was worth it, right? But in most cases, or if you're not going to buy right before an extreme interest increase or price, increase, it probably does make more sense to be more flexible in where you're living, and then just allocating your investments into, a myriad of different assets.
Yeah. And I want to talk about the technology in a second here. This is super exciting stuff. I feel like you're nailing it. This is really, really cool. But when it comes to like where you live, this is just one more thing I want to talk about that I personally struggle with. Like, okay, we rent where I live. I've got the only 3-bedded in LA that's 2,700 square foot. And I've stayed here for like 4 years. I don't want to leave, but I want to be able to leave if I want to leave. Me and my wife have talked about, we were talking about in the DMs, we talked about doing a sabbatical in Europe and just spending 6 months there. Raise a kid there, maybe have them eat that kind of food for a while. Or let's just say I went to the Valley or to Silver Lake to buy a house. I'm still subjected to fire risk, which is like incredible in the LA area. There's crazy taxes. There's mansion taxes if you get into the multi-million-dollar homes and stuff. So there's just like a lot of things that are kind of like working against you as a first-time real estate investor. Whereas if I was an institutional investor and I was buying real estate, I'm working with a big-ass portfolio, it's a lot different than my hard-earned dollar, right? So there's just like, I want to personally have the flexibility to move around if I want to. And I think that a lot of other people, specifically Gen Zs, like you were telling me earlier that buying a home isn't even the American dream for them anymore.
No, the American dream now is freedom. And that comes in different forms, right? It's monetary freedom first, because you can't really do anything if you don't get that right first. And secondly is time freedom and the ability to do what you want. Now, if you are tied down to a specific home, it can be a great thing if that's where you want to be, but it can also be a liability if you want to get out. And you mentioned that there's like taxes on the mansions essentially, right? So if you're thinking in terms of buying larger homes, see, at Casa Shares, we focus on homes that are going to give the best ROI over time. So that's going to be in both from a perspective of dividends, but also capital gains. So we're looking for the best neighborhoods. We're looking for good schools, and we're looking for like overall, increase in value mixed in with a good ROI on a quarterly basis or monthly rental basis. Now, when you get into bigger homes, your cap rate generally goes down. If you try to rent a
cap rate being your profit from the annual.
Yeah. So like basically, the return on investment dollar for dollar is going to be better on a regular home to invest in a regular home than to invest in a super mansion. Now you might get better capital gains, right? But what are your costs that you're incurring to get into that house? What are your maintenance costs going to be? So at Casa Shares, we really focus on finding assets that are going to be, giving a good return and that are going to be easy to rent. You don't want to try to rent a $5 or $10 million house that's gonna have a bad return in comparison to the value of that property.
Yeah, I can only imagine how hard you're just talking about a sliver of the market. 1% are literally going to be renting a house like that, and if they are, because most rich people are not. Most big ass homes are.
They're going to buy it.
You're going to buy it, right? You want the investment. You don't want to just be flushing money down the toilet on rent. So, okay, and I'm excited because we got McKay here, and we're going to talk about the investment strategy behind Casa, because I think that's a critical piece of the puzzle, understanding the neighborhoods that you buy in, and I think the fundamental research that goes into like picking properties is really important. That was one of the questions I had when I first downloaded the app, was like, how do I know these houses are good investments? So I'm really excited to talk to McKay about the investment thesis, but let's talk about the technology a little bit. So walk me through somebody's first experience downloading the app. They download the app, and then what do they do when they get in there, and how quickly can they invest? How much? What's the minimum? What's the maximum? Can they buy more? Things like that.
So it's been our goal from day one to allow investors to start from scratch. Never heard of the app. They download it and they fill out everything they need to do. They go through the process and invest within 5 minutes. That's been our goal from day one. We've achieved that.
Wow.
And I mean, we're always working to try to reduce the amount of steps, but it's also important to remember we are highly regulated by the SEC. So for example, let's say you download the app, right? You sign up like you're signing up for anything else. You put your email, your name, and you go to your email address and you verify that you are a real person, and you get into the app. Then we put you through a very basic process that just asks you a couple questions just to ensure that you go through KYC AML, which is know your customer, anti-money laundering laws. And the reason we do that is to ensure that everybody who's coming on the app has good intentions. That's part of the security that's required by the SEC, and it's just best practices. And that only takes a couple seconds, really, just a couple quick questions. And then you just connect your bank account. And then from there, you can scroll the properties, see which ones you like, see what the financials look like, or projected financials. And, couple more clicks and you're in. You've got your shares. You could start from $100, or you could, depending on the property, go up to 10,000 or more in investment.
Awesome. And can I buy more shares in a month if I have, a little more savings come out?
Absolutely. Yeah. You could buy more shares of the same property, but if months have gone by, likelihood is that you might want to actually diversify and buy into a different property so that you can start to see your portfolio grow. And, reducing risks is always great. If you have different geographical situation, different asset class, different location, it's always beneficial.
Yeah, that sounds really smart. And I think and hope one day that you'll probably have some educational component to help people kind of understand what's it like. Why would you want to own a multifamily versus a single family, and
absolutely 50
units versus a 10-unit multifamily? I'm sure there's pros and cons to those. So let's dig a little bit more into like you entered a highly regulated space. You're SEC compliant, and this is just my own kind of personal curiosity. Like, what is it like? What kind of legwork did it take to get through that? How long did it take, and was there a ton of red tape?
Yeah, I mean, to get a Regulation A qualification through the SEC, which is what we have, and FINRA, this basically takes over a year generally, and we tried to accelerate it as much as we could. We had a really good legal team, and we're able to get it done within about a year. And then there's also other components. We work with a broker dealer. We work with an ATS on the back end. That's an alternate trading system. The alternate trading system is basically essentially a stock market for alternate assets, which allows us to just trade in shares of these properties. And then the broker dealer essentially does the know your customer anti-money laundering checks. They make sure we're in compliance, and it allows us to sell these assets across the world in all 50 states in the United States.
Yeah, I mean, the reason I ask is because we got a lot of founders who listen to this show, and I think that's part of why I think it would be interesting for a lot of people. There's over 5,000 founders who listen to the show and who are specifically tech founders in our audience, and a lot of them are not going to qualify to buy a home like myself. You're either writing off your workstation and you're saving the tax savings. Anyway, my point is that starting a tech company is hard enough as it is. Adding in a year of compliance and regulation work to do, it's impressive. But I know that you guys have raised multi-millions for this business. It's very impressive. Talk me through what it was like raising capital. How did you guys go about that strategy? How did you prove to investors that you were worth your salt and all that?
Yeah, I think in this space, when you look at how big the space is, if you look at, for example, the retail space for stocks, or if you look at the retail space for crypto, and you see how large it's vast, and then you look at the retail space for real estate and how it's just budding. We're at the brink of this really getting started, right? And then you think about historically what's been the asset class that people really want. And it's been real estate.
It's always real estate.
And even if you look at, everybody knows that even 90% of baby boomers made their millions. That the ones that are millionaires, most of them made it through real estate, and not even by trying. It just happened to be they bought a house and became millionaires, right? They weren't planning on
only were that
becoming
millionaires.
So when you look at it from that perspective, I think investors know, and everyone likes a tangible asset. People like to when you invest in a home, you can see it. There's a renter in there, someone renting it out. You can go drive by it. When I go over to Idaho, in the morning before meetings and stuff, I actually went and drove by the units again just to check them out, and it's cool. It's actually there.
Own that.
You can go and see it. It's real. And I think that to people is, especially in the wake of all this stuff that's going on in crypto, where most people are investing in these things that they don't even understand. I think we all understand real estate.
Yeah.
So as long as we continue to go about building this in a way that ensures everybody's safety and ensures that we are compliant with SEC, then the rest of it is simple. We know real estate is valuable.
Yeah, and that's why I think it's just a really exciting product and business. Every now and then I stumble on founders, because I've worked with so many tech startups at this point, and most of the time, 80% of the time, I'm like, cool, it's your business, do your thing. Sometimes I get green with envy. I'm like, damn, I wish I had thought of that. And this is one of those businesses where I'm like, damn, that's a brilliant idea. So I'm really excited for you, and I'm excited to, in full disclosure, I'm helping with this launch. I'm a pretty active player in the company now, and which is pretty exciting to be a part of that. But I'm also fascinated. You look quite young and very few gray hairs for having gone through that whole founding process. It's just
no gray hairs, just less hairs, right?
Yeah, well, it's one or the other. I get the gray ones, but it's just such a pain in the ass starting a tech company and just adding all that compliance. But they say the higher the barrier to entry, the bigger the payoff, and so I think it's gonna have a huge payoff. I think like I said, I think this one's going to do really well. Talk to me about the trust and safety component. I think a lot of people are a bit jarred from FTX. Thankfully, I actually had $30,000 in FTX through somebody that I was investing, a hedge fund that I was investing. Thankfully, it was recouped, but I'm a little gun shy after that. So, what do you tell the skeptics about putting your money into an app from, somebody you've never met before?
Yeah, so the first thing about that is when you invest in an asset on Casa Shares, you're not investing in Casa Shares, you're investing in the asset. So the way we've structured our company, Casa Shares is a company that is a management company. It's where we keep the technology, it's where we keep the app, right? Under that, there's another company that we manage that is a holding company for the actual real estate. And that is SEC regulated. And then each house is put into what's called a different series. So you create a new company essentially for each home. So when you invest in a particular home, you're buying into the company that owns that home. You're not buying in. So even if Casa Shares disappeared tomorrow, right? Which is, unlikely. But if that was the case, your home would still be there and you would still own that investment in that home.
Shit, that's really cool.
So that's a security and that's part of the way Regulation A is set up. And that's what the SEC requires. So you are buying into a solid asset. As long as that home doesn't get up and walk away, or someone just doesn't pick it up and take it away, then you're invested in that home. And we keep a cap table on all the investors' positions, both internally, and we have a third party that does it in compliance with the SEC. So everything is audited. Everything is completely transparent. If anybody wants to read 80 pages of SEC filings, you could check it out on our site. It's a lot of fun.
I'll send it to my ChatGPT assistant.
Yeah, I'll probably summarize it for you.
Yeah, it's a great tool for that. But yeah, I just think it's really impressive what you've built with the technology and just made it so easy and accessible. I've already got my app account set up and I've already been looking at the different houses. I haven't connected my bank yet, but that's the next thing I've got to do is, I want to get some exposure. I've got no real estate exposure. So I guess, I want to make sure we have time to talk to your co-founder here because I'm really interested in the investment part of it. But I would like to hear from you. Have you talked to any of your users who have invested and what do they say about the experience? Who is the typical investor on here? Maybe talk to me about who it's for.
Yeah, we've got people. I actually got a LinkedIn direct message the other day, an in-mail, and it was a younger guy just out of college. He's open for work, and he was like, "Hey, I saw one of your organic posts, what you guys are building, and I think it's super cool." He said, "I got into the stocks through Robinhood. That's how he started in the stock market." And he explained his story. And then he's like, "It looks like what you guys are doing is allowing us to get into real estate in the same way, making it accessible to the masses, and especially the youth who are disenfranchised from these ridiculous home prices." Right. And so, he sent that in and that really made me feel good because now, you're working on something and it's your mission and you're passionate about solving a major problem. And when you see people coming and sending you messages that, "Hey, you know what? I like it." And then I just kind of was like, that's an awesome feeling. And a few minutes later, I actually noticed he purchased some shares and then he actually he reposted the video to all his followers. So he's like, "Yeah, I'm going to share this with everybody." And
yeah, that has to feel good
cool
for you as a founder, just knowing that you helped some young dude out who's driven and
yes,
you provided the only avenue that he would have to get into real estate.
Yeah, that's a big, especially, I mean, it's been hard for even me. I'm not the youngest guy, right? I in my mind, I think I am, right? But it's even for me having all this experience in real estate, being able to work for a tech company, so having a good income to be able to get dual income family, all this stuff, it was still really hard. So when I see these young kids, coming up and trying to get into real estate, I'm just like, I'm so glad we have a solution for them because what's going to happen is if they don't get into it, every generation is going to get more and more priced out because the money's going to continue to inflate. We all know that.
Yeah.
And the real estate, it's not that real estate goes up in value. It's that the money goes down in value. So relative, the prices go up. So the longer you wait to get started, the more you become priced out. And the more you become priced out, the further you are from ever getting started. So that's the gap we need to bridge that.
Oh my God. Yeah. Just thinking about it, I'm like, I'm so behind on this, and I feel bad for the people who are 10, 15 years old. And, when they get into it, these houses, instead of costing $4 million, they're going to cost $10 million.
Yeah.
And it's just becoming more and more inaccessible. And I really do hope that platforms like Casa Shares can democratize it in a way where, the little guys can get in and actually, get a piece of the action, especially with, the Jobs Act and things that are allowing people to, not be sophisticated investors.
We're glad to be working with you. And, we've seen some crazy growth over the last few months, almost 200% month over month.
Awesome.
And that's mostly from organic. That's just people sharing it, people seeing our clips.
Yeah.
So
I think it's going to have a huge viral component. And if you guys are listening and you download this and you get value from it, share it. That you're helping another founder out, you're helping yourself out, you're helping your friends out. And I know we're going to be launching a referral program so people can get bonuses for bringing their friends on. And, $100, I mean, you might spend that on dinner one night. Why not buy a piece of a house with it.
You know, and a lot of people say, well, if I'm going to invest in real estate, I want to do a bigger piece than $100. And why did you make it $100? I agree. If you want to get in, put thousands of dollars. It makes more sense to get a better return the more you put in, right? It's not just about that. It's a mindset, because then tomorrow will pass, another week will pass, another year will pass, and maybe you didn't do anything again. If you start with $100 today, then maybe tomorrow you put in another $100. That's a major shift in your actual action. You're changing yourself from I'm not an investor in real estate to I am an investor. And that mental shift is going to put a lot of things in motion. So if you want to start small, that's great. If you want to start big, that's great. But just start. Start. That's what's important.
Yeah, I mean, it's like a domino that you kick over. I know that you guys are working on a function where we can set up recurring investments, but every time I've used an investment app, I always just set up a recurring investment, $100, $250 a week, and I just let it rip. And I got some investment accounts I started like 15 years ago, forgot about them, and they've, grown tens of thousands in value just from deposits and from roundups and from, equity.
Don't underestimate time. That condo that I bought for $377,000 with 40x leverage is worth $650 in just a matter of a few years. And the second one I bought for $749 is now worth over $1 million. And so that's just, leveraging a small amount of money, really, right? So if you get started today, it's that snowball effect. It's not going to be a linear curve, your rise in real estate. It's going to be exponential. So and of course we can never predict what's really going to happen, but I'm just surmising, right? If real estate prices do continue to go up, you're going to see it's not going to be linear. It's going to be like, hey, I'm investing $100, $200, $500. It's going to be slow at first, but then that will start to snowball. There's a book called The Snowball Effect.
Yeah, sorry guys, we got a little bit cut off. We ran into some battery issues and stuff. But anyway, we're back in action now. So yeah, you were just saying like how just getting in is important when it comes to real estate. And I really wish I had gotten in early. I mean, when my dad passed away, he left my mom a bunch of properties, which he had like one of them he bought for like $35K. It was worth $80K, right? Like, they had tripled in value.
Right.
And it's just because he held on to them. He kept acquiring them and having them pay for themselves. And, every now and then we would flip one, take the profit, roll it into a bigger house, 1031 into a bigger house. But I guess, on that thought of, taking action, can people get started free today? If yes, how? Tell them where to go.
Yeah, absolutely. CasaShares.com. Or you could check us out on the Apple Store, Casa Shares, and, get the app. Within 5 minutes, you'll be in real estate. You'll be a real estate investor. And, it's interesting because a lot of people are thinking about their situation right now, where they're going to be. I think, if you look at the top investors in the world and some of the richest families in the world, they're thinking multi-generational. So whatever you're doing today has a ripple effect. It's not just going to benefit you, but you have to think about how it's going to benefit people after you, or your kids or your kids' kids. So the sooner you get started, the better. That's how I look at it.
Yeah, absolutely agree on the generational wealth thing. It's just like my dad's co-investor, and what he did, when his kids graduated high school, he would give them a house, which is actually like giving them a job, because they have to own it, maintain it, take care of it. It's an investment, right? So that was his inheritance to them, was giving them each a house, so that they would have the responsibility of maintaining and learning to run the business of a house, but also that's their inheritance. And I just think that's a super cool way to pass on the legacy. So with that, Mirza, thank you so much for coming on, man. It's been awesome to have you.
Thanks, Jonathan.
Excited to get this lit.
Let's do it.
Let's do it. Cheers, boys.